In this video, I'm going to look at a stock here that I'm currently in. This is a stock GNTX, Gentex Corporation, and I'm going to click on the manila folder up here at the top, and this tells me what the company does. It's an international company that provides high quality products to the worldwide automotive industry, etc. I'm not going to read all that. I just want to point out some things that I look for. Now, I mentioned that I'm heavily involved with VPA or volume price analysis, and also VPOC or volume point of control. And the volume point of control is where the bulls are in control of a stock versus, or when the bulls are in control of a stock versus when the bears are in control of the stock. And in this chart, this is a chart that I just created over the weekend, which is going to go out to my Insider Club users, but it shows these principles in action. Down here, you can see where the this is the volume point of control. You can see where it went from negative to positive. It had a slight blip here where it went positive, but then it turned negative again. And down at this point, it was trading below the moving averages that I use for trend following. These are the this is the 200, the 100, this is the 50, and this is the 18-day. These are all exponential moving averages. And when a stock takes on this fan form, or fan sequence might be a good word for it, but they have to be in a certain order. The 200 has to be at the bottom, and then the 100, then the 50, and then the 18. And that occurred back here. You can see that the 100 was above the 200, and the 50 was above the 100, and then at this point the green went above the blue, so the fan formation was forming. And as a stock is trending, you're going to see fans like this where the moving averages are pretty close to equidistant apart from one another, and that signifies a strong trend in a stock. Now, I'm currently looking at a daily chart. I'm going to go to the weekly by holding my alternate W key, and you can see how it looks on a weekly chart. And then if I go to a monthly chart by holding alternate M, you can see how it's progressed over the month. And then if I go to a quarterly chart, you're going to see that this stock is out to an all-time high. I switch back and forth between those different time frames just by holding my alternate key and clicking the appropriate key. Now I'm going to go back to a daily chart. I can see that this stock that I'm in is currently out to an all-time high, and just because it's out to an all-time high does not mean it's going to stop moving up. In fact, a stock obviously has to get to an all-time high before it can go on to be one of the great big winners in the market. Now, will this stock be a winner? I don't know. That's why I'm currently holding it, and I have a trailing stop in place. Now, the ideal place to have bought this stock, of course, would have been down here, but it's still in a downtrend. At this point, notice that there is a circle within that candle. That is an effort to rise, a bullish sign. I just clicked on this and the information comes up here. Down here you can see that the stock was under accumulation with some VPA flags down here, but it was still below the moving averages. So catching a stock here obviously would be ideal. This is the expansion phase. The ideal place to catch it is after the expansion phase begins and then it hesitates. So right in here would have been the best place to get it. It's above the moving averages and moving up. Now I have a chart. If I go up to my impulse reaction charts and click on number 3, this is the these are the trigger points, and whenever there is a trigger point or a pullback from a previous day's high, that is a short-term contraction, and the ideal place to buy would be when it takes out that high or the previous day's high. So the entry point would have been right here. Here's another obvious point. It pulls back and it keeps expanding. I'm looking for these short-term contractions with a fan in place. Now this line here represents the group. We always, well, I shouldn't say always, but I like to see the group moving with the stock, because a group has a huge influence on the stock. Now look what happens when the group stalls over here. The stock stalls also, because this is part of an industry group. What's happened right here? There were several positive VPA flags. Here's a test for supply. Yes, this was a negative VPA flag, and it did bounce around, but then we start seeing some obvious bullish flags appearing. At the same time, the volume point of control turned positive here as before it broke out. So there was hesitation. This once again is a contraction area. Where do you buy it? If you're not in, you just take it at some point here. Yes, it's moved a long way. It has gone from approximately $16 to $21. That's not a huge move, and if this fan stays intact, and hopefully the group will turn up again too, that would add momentum to this stock. Let's look at some other things. I'm going to go back to that other chart that I've created a couple charts. This one happens to have the group line in it, but I just wanted to come back to a clean chart and look at some other factors and some other technical and fundamental information for this stock. I've already pointed out the importance of the group, the VPA flags, and VPA flags are based upon the actual information which is generated by the movement of the stock. It's based upon price and volume. I want to point out that as this stock started moving up, notice how volume was coming into it. On this red candle here, the slight pullback, volume was down. And this particular candle here, notice how light the volume was. That means there was very little selling pressure. Now we get up here, stalls a little bit, but volume was light. It pulls back. Yes, there was kind of a volume spike, but it was not anything like these spikes up here that showed the buying pressure. So demand and supply, there is more demand than supply, especially here. Then there's some hesitation as it works through. Here's another buy point right here on an effort to rise. Effort to rise is accompanied by heavy volume. Let me clean some of these out of here and freshen it up a little bit, and then it starts moving up again. You can see that volume was light here. The buyers and sellers were pretty much in agreement. And then on this bar, there is strong buying coming in, and then it tapers off a little bit as it digests the gains. Now when we get into this area, notice that there are some huge volume spikes. By the way, these volume bars are open to close, so it's based upon the candle. Here's a big volume spike here, but if I go up from here, notice that there is very little. Let me make sure I have that in the right place. Take this off of here. I'll bring my crosshair in. Okay, this right here, I thought I was off one. Heavy volume spike, but there is very little price movement. So even though there were some sellers there, the daily range is small on the stock, which indicates that they're pretty much in agreement here. Now the next day there is a magenta rectangle here. Volume has come down. That is a test for supply. Why? Because it closed in the upper part of its daily range. So it's just been basing sideways. This here looked dangerous, and there was a negative VPA flag, but you come down here and you look at the volume, and you see the volume is nowhere close to the buying volume the prior day. So very little selling pressure. That's a shakeout. Look what happens the next day. Volume increases as the stock goes up, and then it based sideways for several days, forming what could be considered a flag. The group's not moving at this point, and it's just kind of hovering around with the group. So we had another down day here, but volume was relatively light. You compare it to the volume around, and there just wasn't a lot of selling pressure here. And then here we have an up day with increased volume. A couple of days where volume was somewhat high, but notice where the stock closed. You always want to see where the stock closed within its daily range. And if it closes near the upper part of the daily range, even though it's red, that means there is more buying pressure than selling pressure. And then on Friday, it actually broke past resistance to an all-time high. Will it keep going? I have no idea, but it certainly looks like it wants to go higher to me, especially if it gets some group support. And since I don't know if it's going to go higher or not, I do have a trailing stop in place, and it's down below this congestion area. Let's take a look and see what else this stock has going for it. If you look up here, this is something that you need to be aware of. I'm aware of it. I'm doing this on the 16th of January, and I know that the earnings are due on the 27th. So this stock could rally into earnings, and then if I have a nice profit in it, I may just hold it through earnings. It depends on what the broader market is doing also. Let's look at some of these factors. These are scorecards. My partner and I, Ian Woodward, and unfortunately Ian passed away in 2016, but we always look at these factors which are calculated in HGSI. The EPS rank is 84. The highest rank is 99, so it's in the upper percentile. Relative strength is in the upper percentile also, as is the group rank. And these combined have an ERG of 236, which is a total of these three numbers. Accumulation is B. It's close to A accumulation, and I'm not going to discuss these numbers right now, but you can see that the earnings growth compared to the same two quarters 1 year ago has been pretty dramatic on a percentage increase, and also the revenue has been increasing over these quarters. So we have not quite a strong growth stock. I would like to see this number at 20% also, but it's showing consistent earnings growth. It's not what we consider a high growth stock. Now this chart up here shows the revenue and earnings growth, and the it's moving up, as you can see, which is good. So the fundamental panel shows us a lot. Now there are several fundamental panels in here. I'm not going to get into all this right now. If you are a subscriber or become a subscriber to HGSI, all that information is available to you. I'm just scratching the surface here, but I'm showing you what I look for. You'll notice that I use very few indicators. I do not believe in a lot of indicators. All the information you need is right here in front of you. Price and volume, group strength. There's always market risk and so on, but this is what I look for. It's all based upon price and volume, and essentially reading the tape. You'll also notice that I always work from the right side of the chart. You can scroll back here and you can take a look as the stock unfolds, and you can play a little game if you want to and see what the signals are and how the group is related and so on. I always work from the right side of the chart because I'm interested in what happens back here. It's important. Support and resistance are very important. But so many people and instructors are looking back at a chart and saying, if you'd have done this and this and this at this point, you would have made a fortune. We don't have the luxury of that. We have to work from the right side of the chart. Yes, I went back and pointed out some of these, but looking at this chart right here, it's very obvious where these conditions were met, where there was a slight contraction and pullback, and I can say that yes, those are good places to buy. but I'm also working from the right side of the chart. So where are we on this stock right now? Where am I should say. An up bar closing near the high after a test confirms strength. Here's your test. Why was it a test? Because it traded down and closed in the upper part of its daily range. Now I've cleared that. We're out to a new high. This is a confirmation. Does it mean it's guaranteed to go up? Absolutely not. That's why risk control is very important. That's it for this video. I'll be adding to this video blog as I go along. I'm just trying to give you a feel for what I look for in case you become an HGSI user, or if you're a user already and if you want to participate both in the Insider Club and the webinars. This is what I teach.